everyone. This is ACDC, Araceli and Colette, all things real estate investing and finances. My name is Araceli, and I'm a transition wealth advisor helping single professional women rearrange their finances to get out of debt quicker and retire faster. And I'm here with my partner, Colette, and today we have a guest, but Colette, can you introduce yourself?
Sure. My name is Colette Rabba. I am a residential real estate broker in the GTA. So I work anywhere from Etobicoke all the way to Hamilton and north, and any area that's west end. That's my spot. That's what I like to work in. And Cheryl, we're so happy to have you again on the show. Thank you for coming on. Cheryl is our expert. The people that, if we have any questions for mortgages, she is the person that we go to. We love to ask questions. We love to work with Cheryl because she is so knowledgeable about mortgages. So what's today's topic, ladies?
Well, today we're going to be talking about something that is being on some people's mind, which is reverse mortgage. This topic is becoming more and more, the people want to know about it. And that's why we have Cheryl here, because she is a mortgage agent. And Cheryl, can you introduce yourself? Tell us who you are.
Yes, thank you. I'm Cheryl Small, and I'm with a brokerage named Matrix Mortgage Brokerage. And we are a GTA brokerage located in the GTA, and we are funding deals all across Ontario. Our specialty is private funding and the alternative space. We are specialists in that space.
That's awesome. And so let's get started with reverse mortgages. Cheryl, can you tell us, what's a reverse mortgage? A lot of people want to know. They have lots and lots of questions, but please tell us what it is. Yeah, I think that you wanted to share some slides, right?
Yes, that's good. Slides. I'm happy to tell you about it today. This is a fantastic subject. More and more people want to know about it. And I think it's something that if everyone sort of learns more about it and they become familiar with it, they'll understand it more. So let's get started with the slides. Okay. Sorry,
technical difficulties. There we go.
Okay. So let's start off with, what is a reverse mortgage? A reverse mortgage is basically a loan, a mortgage that gives you access to the equity that you have in your home. It's an additional source of cash, tax-free, and there's no principal and interest payments. Okay, so that's huge because a lot of people are struggling with their payments right now. So just to know that you don't have that principal and interest payment is huge. Okay, so the reality is this, and why this is so big right now, because over 66% of all retirees are carrying debt into their retirement. So if we're looking at some of the statistics, 47% of Canadians 55 to 64 have no pension. A lot of people, as we know, are self-employed and there's no pension to get from anywhere. 1/3 of Canadians have no retirement savings or have less than $200,000 worth in savings. So Araceli, you being a financial specialist, you know.
So let me tell you a little bit about this. A lot of people that they don't know, because of the cost of living here in the GTA, we have a lot of seniors that are in debt because several reasons. They have gone through transition. Maybe they have given some money to their kids to buy a home, and they are depleting the savings that they had, and therefore, and we are also living longer. So that is very important for you to find out, if this might be a product for you.
Absolutely.
So go ahead, Cheryl.
So what we've discovered is over 50% of the retirees have said their money is not going to last beyond 10 years. So that's a pretty sad situation. And the average expenses for people who are 65 and above is about $60,000 a year.
Absolutely, yeah.
But the average income is only about $40,000. So there's a shortfall right there. So that's quite a bit of a shortfall. So I want to show this little slide. It's great as a visual. If you take a look at this, you can see on one side, this is where most of the resources for retirement are coming from. So you've got savings, RSPs, employee pension, CPP, OAS. Those on that side are the taxable sources of income. On the other side, you're seeing your real estate, which is a big chunk of your income and savings. And that's a huge portion. So I really wanted to give that to you as a visual so that you can really see just how much you've got in your home. Okay. This is also a cool little graph here. Along the bottom, you're seeing the years, and up to September of 2019, there was over $4 million funded by Canadian banks in reverse mortgages. So what that's telling us is this is not something that is, it's not new, it's not something that people aren't embracing. This is something that's very much needed. So let's talk about how the reverse mortgage really works. So you're not paying that monthly principal and interest payment. So what's happening to it? So that principal and interest is being added back onto your mortgage, okay? So just understand that. But you are going to retain full ownership and control of your home, and it is a very simple process to go through for the approval. So you have to be a Canadian homeowner, 55 and above. We look at your age, the location of the property, the value of the property, and the condition of the property as well. And the type of the property is very important as well too. So you can only receive up to 55% of your home's value, and the older you are, the more you will receive. And that makes sense, okay?
I have a question.
Yes.
Does it make any difference as to how much you still owe on the property? If you have only paid down, let's say 50% of the mortgage on it, does that factor in at all?
Well, not really. You're only going to get approved for a certain amount. So I guess you could say yes and no. It does sort of matter, because when you apply for the reverse mortgage, we go through a calculation. There's a calculator that will tell me approximately how much you're going to get approved for. That's based on your age. The older you are, the more you get. So it'll depend on the value of the home and your age. We'll do the calculation. It'll tell us exactly how much you're going to be approved for.
Okay.
Okay. So there are a few things that you have to do as the homeowner. First of all, your responsibility is that it has to be your primary residence. So this cannot be a residence that you're not living in. You must pay your property taxes, you must pay your home insurance, and you must upkeep the property. Those are sort of your responsibilities if you want to look at it that way.
Yeah, but I think that that's where, if you are in a home, those are regular responsibilities, in my opinion.
Absolutely.
You don't even have to have a reverse mortgage in order to do that. So.
And right, so that shouldn't even have to be said. That should be understood that those are the things you have to do. But just so that we're perfectly clear on what your commitments are for this mortgage, you don't have to make that monthly principal and interest payment. However, these are the things that you are responsible to pay monthly. Okay. So, in my opinion, a reverse mortgage deserves a conversation at this point. With COVID and everyone experiencing all the financial setbacks, it's definitely a way that retirees can tap into resources that they already have. Now, I will say this, I'm not saying reverse mortgages are for everybody, but I am certainly saying that it's a great option for many people, and it deserves to be looked at. It deserves a conversation. So let's look at the pain points. Why am I saying that it deserves a conversation? So as Araceli said, people are living longer. Before, I think the age was around 85. You know, they were saying, you know, people would live to about 85 years old. You would set yourself up. You'd see probably someone like Araceli who would, you know, have you get your ducks in a row, and you'd have enough money to take you to about 85. Well, guess what? People are living longer, as you said. Okay. And the money that they're saving, it's not lasting. Okay. Now retirees have all this untapped resources in their home, money that they're just sitting on. And I have to tell you that there's a lot of clients that I see that have a lot of debt, and they may not have a lot of disposable income. They may not have a lot of liquid cash, but they've got all this money in their home. It's untapped. They're not touching it. They're just sitting on it. So why would you want to see someone sit on that money and month to month there's a shortfall? They can't meet all their expenses. And that leads to huge stress and health problems. That's what I'm finding. Okay. So this money, the solution is, okay, let them tap into the money that they have there. That will help them with the shortfall monthly. They can consolidate debt. They can take care of all the healthcare costs. If they want to stay in the home that they are, they can bring in health. They've got the money to now pay for that. If they wanted to, if they were still mobile, they could travel. And as I said, they can age in place, which is huge to a lot of retirees.
Yeah.
They don't want to move. What I will say is that it's important to note that their beneficiaries can still inherit the home. And if you are tapping into some of this money earlier, you can even give your family their inheritance before you pass away, which I think is kind of cool because you can actually see and enjoy them enjoying what you've given to them. I always think that's kind of cool. And one thing I have to really point out is that there will be no negative equity. I know some people are wondering, am I going to use up all the money? Well, because they're so conservative with how much they're lending to you, you can only get up to 55% of the value of your home. That's if you qualify. Everyone does not automatically get 55%. So keep that in mind. Again, remember I said the older you are, the more money you tend to get, right? That's the way the formula works. But you will never sort of use up all the money, and there will be money left over for your whoever you'd like to leave money to, your beneficiaries. So I want to talk about some situations, some scenarios. So we had a retiree that had a child that was facing a lot of financial distress because of COVID-19. They had lost their job. The reverse mortgage products, there's a number of different products. So we would be able to fit you to the product that's best suited for you. One of the products that is brand new to Home Equity Bank is a open mortgage. It's an open short-term mortgage. So in a case of like this scenario one, this client was able to take the funds out to help their child earlier than if they had passed on. They were able to take the money out of that fund, give the child the money. When the child was back to work, they were able to get the money back. They were able to pay it back to the short-term fund without penalties. So this is a great product that they have just started, Home Equity Bank. And that's something that, you know, it's very beneficial and is something that is, the options are there for people. Okay. So scenario number two is a retiree who wanted to renovate their home before selling. And so you might say, well, why do you want to renovate your home before selling? They wanted to get top dollar for it. So again, they opened up this short-term chip mortgage, and it's fully open. They were able to renovate and increase the value of their home, turn around, pay it back, and get out of that short-term loan with the reverse mortgage. And at the same time, they increased the value of their home and sold at a higher price. So that was something that they wanted to do.
I have a question.
Yeah.
What is a chip open mortgage?
Well, the Home Equity Bank, they call their reverse mortgage a chip mortgage.
Okay, good to know, because not everybody knows these terms.
Yes.
So he says, oh, do you want a chip mortgage? And you have no idea. And you go, yeah, that's what I want. You have to know where you're at. Yeah, you have to know
I should have mentioned that. So there's two banks that will, let me step back a little bit. There are two banks that offer the reverse mortgage. It's Home Equity Bank, and they named their product a chip mortgage.
Okay.
And
it must stand for something.
Yeah.
Yeah. You know what? Yes, it does. And I'm sorry, it's escaped me right now, but I'm so used to just calling it the chip mortgage. But that is the mortgage for that you would get through home equity bank. The other bank is Equitable Bank. They're a little bit newer to the game, and they have a few different products as well. So those are the two banks. So um, in scenario two here, they were able to do their renovation and they were able to sell their home. So scenario three, this couple, they wanted to do a bridge loan. So for those of you who don't understand what a bridge loan is, you may have a home that you are selling and you are buying another home at the same time, and you did not close one deal yet, but you want to get the other deal closed, and you need to bridge between the two to get the funds that you need to close from one deal to the next. So this couple wanted to purchase a new home, and they still had the old home. They needed the funds to bridge between the two homes. They were able to do that with this mortgage, short-term open mortgage from home equity. They were able to close on their new home, move in, and in 2 months they sold on their old home, and they were able to get the money back, paid off the reverse mortgage, the short-term reverse mortgage, and they were able to do that with no penalty. So just understanding how many different things that you can do with the reverse mortgage is very important. I think people are just sort of hearing reverse mortgage, you're kind of remembering possibly what you heard about the US market, how reverse mortgages went there. I think with the reverse mortgages in the US market, they actually let you go up to a higher amount. So you were really using up a lot of the equity in your home. With these two banks, they are more conservative, and you cannot go beyond 55% of the value. Okay, so I'd like to go over some frequently asked questions. So sometimes people will ask me, well, you know, the rates are so high. Right now, the rates, just like any interest rates, are just comparable to what you'll find out there in the market, from 3.19 to 4.99, depending on which bank you're going with. There's no broker fees, and this is actually less than you would pay on a second mortgage. So that's important to note. Okay, and I'd like to ask, like, where can you live without making a payment? Tell me where you can live right now today without making a monthly payment at all. So you are paying for all of that as well. And some people will ask me, is a reverse mortgage a last resort? And I'd like to say that often it's a first resort, not a last resort. Even people like yourself, Araceli, financial advisors are now telling people about this option. And it's not a last resort, it's a first resort. It's tax-free dollars. And it's allowing retirees to live and enjoy their life on their terms.
So what happens if they live, because these all come with time attached, right? Any arrangement that you make with any bank, with any kind of, you know, this is law 101, when you make an agreement with anybody, there's always time involved. So with a reverse mortgage, you also get a time limit with this as well, do you not?
Actually, you don't. When you apply for the reverse mortgage, you apply one time. It's a one-time.
I understand you apply, but let's say, okay, I have 300, let's just say, I have $300,000 on this reverse mortgage that I'm allowed to tap into. Once that money has been tapped into, now what happens?
Each year, because they're so conservative with the amounts that they're giving to you, each year as your house is increasing, okay, the value of your home is increasing, and they're so conservative with the value, there's never a time where you actually tap out and use all the equity in your home.
What if I did? What if I went and bought like a Maserati and said, okay, you know, this is it. This is my life. What happens? I'm being sarcastic, but do you know what I'm saying? So if somebody says, I have a lot of debt I want to pay off my credit cards, I want to pay off whatever, you know, this high interest rate that I'm paying off my credit cards in. I want to take the money and put it towards this reverse mortgage. And this does happen. People do hit their max. What happens now? I'm not dead. I'm still alive. I still want to live in my house.
Absolutely.
What happens?
You would have to wait until more equity is built up into the home. Obviously, you can't take what there isn't there. So
this is something, if you can look at it as refinancing.
exactly.
So if you don't have a lot of equity in the home, there is nothing to tap into. So
Right.
the reason that more older people are looking into that is because most of the times they already have a large portion of the home paid for. Sometimes in some cases their house is paid for. So they have a large amount of equity to be able to tap into.
Absolutely.
Well, why would I do a reverse mortgage? And you know, I know the answers to all this, but I want to make sure our audience understands what a reverse mortgage is. So I'm playing a little devil's advocate here.
Yeah.
Let's just say I have, you know, I have a lot of I'm just trying to say a scenario. I have a lot of medical bills. I have a lot of debt. I want to use this this reverse mortgage to pay that debt, but also for me to continue to live my lifestyle, you know, whatever that may be when I'm retired.
Absolutely.
Now, sorry?
Absolutely. And that's why leading up, I'm trying to illustrate to everyone that one, it's a viable option, and two, what we're seeing is people do not have enough money to live. They don't
I understand that. I understand that. But now I'm at the 300,000. I've tapped out. I've taken everything I can out of that reverse mortgage. Now what happens? What does my life look like? I want people to understand that this is not like, you know, a tree of money that will just rain down.
No.
Yeah.
Actually, before I'll get back to that answer for you just in just a second. So another question, and we're almost to the end here. Another question people will always also say, well, why don't I take a HELOC instead of a HELOC is a home equity line of credit. So that is against your home as well, but it's in a different format. So a HELOC, you would still have to have good credit. You would have to make monthly payments, and you would have to qualify for that. So again, a lot of people who are seniors or a lot of people who have retired could not qualify for that. They couldn't qualify for it. So that's why the reverse mortgage is such a really great product. So let's talk about the repayment. So you have no mandatory payments until you move or sell. You keep title, or the surviving spouse, if one has passed away, would keep title of the home. If both spouses have passed away, your beneficiary would get 6 months, and they can be a little bit forgiving with that too. 6 months before they would have to either sell the home or get a new mortgage on the property that is not a reverse mortgage.
Right, to pay off that loan.
That's right.
They choose to keep it. So yeah, and this is what happens. So let's play the scenario out. Oh, and this is the other thing that I really, really must say. Whenever you do something like this, please make sure your wills are written and signed. Because what happens is if somebody takes a reverse mortgage and they don't tell their family, that's the other thing too. Please talk to your families before you do this. Because it's such a surprise when you have the executor of your will realize that, you know, it's possible that you don't have a will. And nobody knows that this reverse mortgage exists, or they have the options to either pay it off or to to inherit the property. So all these things, please talk to your families. Don't go alone on this.
Yeah, now this is what I mean. Absolutely. And I was gonna pose that question to the two of you. This slide's telling you, talk to your family.
Exactly.
By no means am I saying go off road and do this on your own. No, this is a family conversation, because I understand that oftentimes people they want to leave something for their family.
Right.
I want you to do your research. I want you to talk to your family members. As you say, make sure your wills are up to date. This is not a last resort. It could be the first resort. There are many seniors that I see every day that are struggling. And so these options are options that are viable.
Right.
So that's it for the presentation, but really what I want everyone to just sort of realize is that this is a viable option. And then I pose the question to you. What is it that you would see that's not a good option about this? Because there are a lot of people, as I said, the diagram that I showed you, it was a visual because I wanted you to see how much equity people really have in their home, but yet they may be cash poor, but they have all this equity in their house. And what are they doing? They're sitting on it. Why? They're sitting on it because they are guilted in some cases not to use that money, to leave it for their family. But oftentimes, even if they are able to go up to 55% loan to value and use some of those funds, they have more than enough to still leave money for their family. And I understand people want to leave something for their family. I get that. And I appreciate the fact that they want to do that. But I can't tell you how many times I've seen people who are struggling. They're struggling themselves. Why? So that they can leave it all for their family. Yeah. And it just makes sense.
So one of the things that I wanted to point out here is that a lot of people don't do their financial planning early enough. And that is one of the things that lead to that situation. So even though it's not the last resort for a lot of people, there's a lot of circumstances that play in here. First of all, you may have had some kind of a life transition that made you deplete some of your savings. Maybe you're helping one of your kids buy a property, or maybe they're struggling themselves. And the same, if you're living longer and you require more money to continue on with your normal life, and you haven't done the financial planning that is required, then it's harder. And obviously, the reverse mortgage becomes a very viable option for somebody to at least tap into their equity.
Absolutely. And this is, and you're absolutely right about that. When we look at this, we see the numbers are increasing. As I said, in 2019, there was over 4 million reverse mortgages. So it's a viable option. People are using this option. Why? They're able to travel. They're able to renovate their home. They're able to give money to their families. They're able to pay for education for their grandchildren. They're able to live in the home that they've always lived in. They don't want to pack up and move, and the expenses involved with moving to another home. They don't want to do all those things. Also, they're familiar with the people around them, the home that they're living in. They want to stay in place. And this gives them the money to do what they have to do for themselves, but it also gives them the extra money to give the money to their family members now without feeling guilt-ridden. So, you know, as far as I can see, it's a win-win.
I have a question.
Yes, absolutely.
Can you get insurance on this? So when you actually do leave your house to your, let's say, kids, is there an option to get insurance on this being paid off? Because I know a lot of, or there are some insurance policies that say, if I die, you know, whichever way, the mortgage will be paid. Whatever's
well, I
left.
think that's a question for Araceli, because
That's why I'm asking it.
you can get insurance. I mean, that's what.
Absolutely, and you can cover the remaining of what would be owed. We can make a calculation and find out. However, remember, if people are going to that extent to get a reverse mortgage just because they're already struggling with their monthly payments. So, and if you're older, usually after 55 to 60, the coverage on insurance becomes very expensive. So that it's, you know, obviously, if they are going to be doing this, they might free up some of the cash and put that into an insurance policy that ensures that the house will be paid, or whatever it's owed in the reverse mortgages will be paid at that time. So it is a matter of going back and do exactly that. Do your financial planning early, find out what does it require, and then you can plan and decide if this is a viable option or not, right? And also in some cases, people at that age, they may not be longer insurable, which it leaves you kind of like no choice, right? Yeah. You kind of just leave it like that.
Yeah. I will say this, you bring up a good point, Araceli, when you say the financial planning. If people, if there is more people meeting with someone like you to plan their retirement out, I think we would have more people in a better situation. But what I will say is this: thank God for so many people who were able to purchase a property a long time ago.
Absolutely.
And so they may not be cash rich right now, but what they have is this property that has amassed so much equity.
Yeah.
And that's golden. That's something that they can tap into.
Well, that is one of the things that we do this show, because that's what I like real estate for an investment, because it's very solid. You know, we can see how it has been appreciated, at least in the GTA, the appreciation is great. And you can always tap into the resources
Exactly.
if you absolutely need to. So
Well,
I think
with
that
this,
you can agree on that, Colette, right? So
Oh yeah, absolutely. Like I think it's really, it is an option. Like this is what we're here for, to explain options to people that they might not have otherwise thought about it. It can be frightening. It can be something that you're unsure of, and that's what we're here for, to give you that advice and to give you that knowledge, to say you have options and to go through if it's really right for you, because this is something that when you talk to your family, again, whatever, when you said the guilt involved in saying, oh, I want to leave this legacy of you know, property to my kids or to whoever, but then live like you're suffering because you can't pay your medical bills, you can't, you know, sometimes even buy the few luxuries that you want. This is something that there are options. And when you hire any three of us, I mean, we always explain options to people. We don't want people to feel stuck, that they're old and they have no, you know, they have limitations between this and that. The first thing you have to do is go through your financial, go to Araceli or your financial advisor to say, give me some options. And if your financial advisor doesn't give you options, I would say you should change your, yeah, you should find.
Because you know what, this is not a cookie cutter. It's not like, you know, you're 55, then you should apply for a reverse mortgage. It's
Oh yeah,
absolutely not. So you have to look at the entire situation of where you are in and what are your financial needs.
right.
If there's any other way to tap into other resources before you go and do this. But
Yeah.
absolutely, this is becoming a very viable option for a lot of seniors that they are struggling with finance.
Yeah, and one other thing too that I think a lot of people don't look at, you know, people don't look at, this is a whole different topic, but when we say options, there's other options too. There's things like home share, there's things like Airbnb, there's things that you don't have to be a landlord to make extra money, and you can still obviously age in place. I'd like that aspect of it. So there's a lot of options you have that you just might not have gone through all of the details of all your choices. So really talk to one of us. We can always point you in the right direction. If it's not me, you know, I have a lot of people come to me and say, I need to sell my house. I go, really? Are you sure you need it? They're like, no, but we don't want to sell it. I go, okay, well, let's talk. And then if I can't answer those questions, I'll say, here, talk to Araceli. She'll figure out your finances first. There's still lots of holes. I don't exactly understand the whole story. Or to say, okay, talk to Cheryl. She'll pre-qualify you. She'll tell you how much you can take out, either reverse mortgage or HELOC or whatever the case may be. And you say, okay, this is the type of lifestyle I want to live. Some people think the house is way too big.
I'm really glad that you made those other suggestions, Colette, because again, sometimes people are not thinking about those other options. And by no means, I want everyone to know, I am not saying reverse mortgages for everybody. No, absolutely. There's people that come to me that I say, it's not for you. I'm sure this is not an option for you. So I know that some people are afraid of what they call predatory lenders. And I want you to know that the reverse mortgage option is not predatory at all. These two banks, Equitable and Home Equity, are federally regulated Canadian banks.
Oh yeah.
Not to play by the rules. This is not something that they're just scamming people out of their money.
Well, and this is the other thing too that I really, really want to make another point, which we've already said it, but don't go alone. Don't go at this alone. You have people, get your trusted advisors that if you don't have family, you have friends. I have a friend who wants to move into a retirement village and she said, can you help me? Of course I will help her. I might not make a commission out of it, but I want that person to feel that they're making the right decision for them. I don't think she's anywhere near going to a retirement village. So this is the funny thing, that you might have an idea, and whatever the sales pitch is, right? This is the thing we always get hung up on. Oh, you know, that sounds like heaven. I love it. I want to do it. But then when you really get down to it and you read the paperwork, you read the fine print, have an advocate there for you. And it doesn't have to be your child, you know, or it could be a lawyer, it could be a friend, it could be anybody that you trust, that they will go through that document with a fine-tooth comb and ask the questions that you might not really see, that you have to ask those questions. Absolutely. So please, whatever you do, keep yourself safe and do what you want. Don't worry about your kids. Don't worry about what they want.
Well, I think a lot of people are thinking about their family. There's a lot of guilt involved.
Of course.
The people that oppose this, most of all I see, are not the retirees, it's their family. Why?
And they should come up with a solution that works for them, not be selfish to say, oh, I want this magical, you know, fairy money that's going to come to me when you're dead and I get your house.
Mm-hmm. A lot of people are concerned about their inheritance. You're cutting into my inheritance. Instead of them saying, oh, you know, mom and dad,
what can I do?
You're taken care of.
What can I do to help you? Right.
Exactly. Let's take care of you first. And then if there's anything left over, fine, I can have that after that. But sometimes you're not seeing people think that way. And
of course,
it's very sad.
No, and that's the thing, to be selfish at that time when your parents, let's just say if it's your parents in this situation, to have your parents struggle for you to, they're the ones that worked hard for the money. They're the ones that paid the bills all this for these years, to have a pleasant retirement, to have a pleasant, you know, this is the, I hate to sound gross, but it's the end of your life. Like you want to have you want to be comfortable at least.
Yeah. Well, now we have people living a lot longer. And the thing is, if you are in your 80s or late 80s or maybe 90s,
right,
the aid that you need at that time is higher. So therefore, it's going to cost more money. Yeah. So this is not something that you plan to do it because, you know, the age of living, it's been extended, you know, year by year. So most planning was done to maybe 80 to 85 before, and now we are actually planning to 100.
Wow.
Well, but also like we're in the age of COVID, so let's just face that too, that we don't know how we're going to age. If COVID is that sort of somebody, let's just say somebody gets the virus and it doesn't actually leave their system, they might not realize the trouble with their health. It might, like, we still don't know, we don't have that data to think that COVID could affect our health later in life. It could really leave our lungs scarred and things like that. You know, you hear a little bit here and there, but when you think about it, what kind of quality of life, even if you don't live very long, what kind of quality of life do you actually want and that you can afford? Oh my gosh, how many times have I heard that the medical expenses, the drugs that we have to pay for that aren't under OHIP. Yeah. These are huge costs that we don't realize we don't have them now because we're healthy, knock on wood.
Absolutely.
But we don't know what's that gonna, you know, you really need a contingency for that as well.
Also, some people, because they want to age in place, they may want to bring in the, you know, the
caregiver. Yeah.
That is very expensive.
Yeah. But
they may have the money if they tapped into some of the equity in their homes. So, I mean, but let me say this. There's some seniors that want to travel. They're very mobile. They want to travel. They want to tap in. And as the diagram that I showed you, the other half of the diagram where it showed, those are taxable. So if you take money out of your investments, if you take money out of your RSP, those are taxable. Whereas if you take money out of your reverse mortgage in your home, it's not taxable in the same, it's not the same. So you're tapping into that. And a lot of people want to travel. A lot of people want to do other things and tap into that money there. So it's just an option. That's all I'm saying. It's just an option.
Yeah, we all have options. That's what we're here for. Please give us your questions. We would love to answer them. If you can't reach, you know, just leave your comments below. If you can't reach any of us directly, I have my phone number up. You can always text me, email. I'm sure the girls are both.
Yeah, I will have all the
accessible.
Yeah, all my information is below, and also we're gonna post Cheryl's information if you have any further questions about reverse mortgages or anything that related to mortgage. By any means, contact her. She's very knowledgeable, and she'll be able to help you out with that. So with that said, well, thank you. We want to really thank you very much, Cheryl, for being here today and answer, some of these questions that most people have.
Thank you for having
about
me.
it. So
thank you for having me. I may not have touched on everything, but please, if you have any personal questions, I can answer them. And there is no pressure. I'm not going to try to convince you. If you want questions answered, I'm happy to answer them. No pressure, no commitments there. Yeah.
Yeah. Yay!
Thank you.
Thank you so much, Colette, and we'll see you next week.
Thanks, everybody.
Bye, guys.
Bye.
Thank you.
Bye.